The government announced 95% mortgages a few months ago, and they're about to come out this month. But are they really meant to help you with low deposits, or are they a scam to help you pay more interest to the banks? Let's find out. Hello and welcome to The Adult Life, where we give you the tools to be a happy and healthy adult. My name is Simi and I'm the adult in charge. So the reaction to the 95% mortgages coming back onto the market was a bit meh, to be honest. People were a bit wary about the high interest rates, and because it wasn't just for first time buyers, people think that the government is just doing a bit of hanky-panky to keep the house prices high. And you know what? It could be true. But aside from all the conspiracy theories, it might actually benefit you. So for those that don't really know about it, I'm just going to give you a quick overview of what the 95% mortgages are, and these are going to run from April 21 to December 2022. You don't have to be a first time buyer to use it, and you can buy any property up to 600k. It has to be a repayment mortgage, so no interest only mortgages. And the government has also said that one of the products the lenders have to offer is a 5-year fix. And you have to be a person buying it as your main residence, so you can't buy it as a buy-to-let or use a company to purchase it. So you might have actually seen that there are already 95% mortgages out, and those aren't backed by the government, so they can put their own stipulations. And what I've seen is that they have a lot more criteria that you have to satisfy than the government ones. So some of them you have to be a first time buyer, some of them they can't be new builds, some of them they can't be flats. So when you have a look at those, you might want to check and see whether what you want to buy actually fulfills that criteria. So running through the mortgages, there are actually a few pros and cons that you have to consider before you get one. So first of all, you need a smaller deposit for what you want to buy. So if you are buying a 200k house, instead of having to pay 20k for the 10% deposit, you can now only have to save 10k, and that can be the difference between buying a property this year and buying one in 2 years' time. For the people who already have the 20k deposit, for instance, you can actually buy a bigger house. So if you're buying a 200k house, you might just be able to buy a 400k house instead. And both of these means that you can get on the ladder faster, which means you can start buying now instead of in the future when it's possible that the prices might be rising. And finally, the 5-year fix means that you're a lot less likely to go into negative equity, mainly because over 5 years house prices would have stabilized. So even if there was a slight dip after you bought your property, in the 5 years that have passed, you would probably go back into positive equity. But the positives are great, but there are actually a few cons as well. And the first is affordability. Now, most lenders have affordability checks that you have to pass before they'll lend you the money. So even if you do have the 10k deposit for the 200k house, they'll probably want to make sure that the 200k isn't more than 4.5 times your household income. So even if you do have the deposit, you still might not be able to borrow what you need just because your income is too low. Another con is a lot of people have said for a long time that the more available credit is to people, the higher house prices actually go. So by doing this scheme, the government might be inadvertently pushing house prices even higher, which is really not one of the things they want to be doing right now. Next, because 5% is such a low deposit, it's very possible that you can go into negative equity. This might not be as big a concern when you're thinking about 5-year fixes, but if you do a 2 or a 3-year fix, it's very possible that when it comes time to remortgage, you might not actually have enough equity to remortgage. Then you'll be put on the bank's standard variable rate, and that's really risky because it could be really high. And the last con is the high interest rates. Now at the moment, interest rates are a lot higher than they used to be, obviously because of what's happening in the world. 10% deposits have an interest rate of about 3.5%, which is already a bit high. But we're seeing the 95% mortgages have 4 to 5.5% interest, which is a lot higher than all the other rates. The thing is, the pros and cons, while good information to have, are definitely not enough information for you to decide whether you want to get a 95% mortgage or not. Especially from 100k Twitter, who would love to remind you that the extra interest that you're going to spend paying for the 95% deposit would be better invested in their one-time only special plan, and they can make you 10 times the return. But honestly, how much of a premium will you be paying for the 95% mortgage? And is it actually worth it? So to help us figure out, it's time for some quick maths. So I'm actually going to directly compare a 90 and a 95% mortgage so we can see with hard facts whether it's better to get it or not. So I'm not a mathematician, even though I'm an engineer, or I was. But I'm going to be using simplistic examples. I don't have time to be doing differentials or anything like that. So it's going to be a 200k house for 30 years. We're assuming there'll be no overpayments made and the house price will be the same price at the end of the 5 years. So let's talk about the 90% mortgage first. And funny enough, these have only just come back on the market because of all the global stuff happening. So it's really funny that they've come back on and then 95 ones have come back on as well. So it gives a little bit of variety to the market. And the average interest rate you're gonna be looking at is about 3.5%. So if we have a 200k house, a 10% deposit will be 20k, which means that we're borrowing £180,000. And what this means is you have just over a £800 monthly payment, with about 280 going to the principal and 520 going to interest. So over the 5 years, you'll be paying about £48,500 to the bank, 30,400 of which is interest. And if you just keep going on with this loan, you'll pay £291,000. And at the end, you'll have an 80.7% LTV, which is basically the loan remaining to pay. So as you can see, there's a lot of interest being paid, and this happens whether you're on a 5%, 10%, even 25% mortgage. The beginning of the mortgage, you pay a lot more interest. So at 80.7%, you'll probably get the 80 to 85 range. And if you want to overpay a bit, and I know I already said no overpayments, but I think about £2,000 will take you under 80% and you'll get even better interest rates. So that's something to consider. Now let's look at the 95% mortgage figures. So you'll be putting down a 10k deposit, which means a 190k loan, and you'll be paying £907 monthly payment. Ooh, I'm feeling that in my bones. So £630 will go to interest and about 270 will go to principal. Over the 5 years, you'll pay £54,400 and £36,800 in interest. And if you continue with this interest rate, you'll be paying, I think, about £320,000 back to the lender. And finally, at the end of the 5-year term, you'll have an 85.9% LTV, which will put you in the 85 to 90% interest rate bracket. So for this part, I'm going to use my phone because all these numbers are not staying in my head. So directly comparing the two, if you get a 95% mortgage, you'll have to pay £100 extra a month. You'll also pay £5,883 extra over the course of the 5 years. And you'll actually pay £6,426 extra interest. And altogether, this means you're paying about £1,200 extra per year to get a 95% mortgage. So let's not even lie, 6k is a lot of money to be spending, whether it's over 1 year or it's over 5 years. So I'm not a financial advisor, but here's how I look at it. That 6,000 that you're spending is money that you're spending to accelerate your purchase of this property. So either you'd be spending it on the mortgage or you're spending it on rent. So think about how long it would take for you to spend 6k on your rent. For some people, especially if you live in London and the southeast, that is possibly 3 to 6 months of rent. For other people who live in the north or in places that the rent is cheaper, that could be like a year and a half. So if you know that every month you're spending huge amounts on rent, it's actually probably a better idea, if you've already found a place, to get a 95% mortgage and buy the house that you want to buy. If your rent is cheaper, then it probably makes a bit more sense to wait a bit, and because your rent isn't actually that much, you won't be losing a lot of money. Something that I always tell people to think about is the fact that house prices are going higher in a lot of areas. And a lot of people who were predicting crashes, who were predicting that bad things were going to happen to the market, waited a long time and have now been priced out. And that's something that I would hate to happen to you guys. So from my own opinion, yes, my opinion, don't come try sue me. If I had a property that I absolutely loved, but I only had a 5% deposit, I would probably purchase it as soon as was possible for me, just to get on the market, especially if it was at the top of my affordability, because I know how painful it could be to be priced out of an area because prices have gone up by 20 to 30k in a year or so in the middle of a pandemic. So this wasn't meant to give you a definitive answer, but more give you information and things to think about. 95% mortgage could be better for you, or it might be better for you to wait. Let me know down in the comments whether you're planning to get a 95% mortgage or whether you're gonna wait for 10 or 15%. Well, that's all for this video. Until next time, see ya.